Good evening. Dan Fitzpatrick here, stockmarketmentor.com. And I want to look at Penn National Gaming here. This is kind of an interesting chart here, and it's a great, it's a really kind of a good template for how you would be buying and then adding to a position here. The first entry would be, I know some of you will say, well, right here. If you're going to do that, do it right here. None of that is what I'm talking about. The stock was, trading, a little sloppily here, but basically it was in kind of a cupping pattern, and then it started squeezing. So overall, what we were having is this within this this rectangle, we were having this sideways consolidation. You can see it was a sideways consolidation pattern, and then it finally broke out here. Big breakout right there on high volume, and that's what we want to see. So this was, right here was the initial entry that you would make on your trade. Stock immediately pulled back, dang it, but it didn't threaten your stop. Wherever you're putting your stop, it can't be tight enough. It can't be so high that, a pullback like this is going to stop you out. You have to have it down, say, below here. It's pretty complacent to keep it below the 50-day moving average, but you just don't want to have it too tight. But the point is, so, you buy the stock, it pulls back a little bit, and then it runs up again. And maybe if you're really aggressive, you're buying some more right here because you say, whoo, okay, bought the stock, withstood the first little correction, the first test of the pullback. Now it's moving higher, boom, I'll buy more at 80. But maybe you didn't. Maybe you just said, all right, I have my initial position, I'm just going to hang on to it. So the stock runs clear up here to 100 bucks. Guys, that's 25% from a breakout at 80. But then it pulls back. So maybe you sold some, maybe you sold all, but by gosh, you're still looking at the stock. Because why? Because it's doing this breakout, little shallow pullback, big monster move in a short period of time, Merry Christmas, and then a pullback through the new year, and then whoom, you get this kind of move to the upside. So what are you doing now? If you have your initial position, now you are adding to it. It's been a it's been a 20%, 20% pullback from 100 to 80. 25% move from 80 to 100. That's math. But now that it's pulled back and it's running higher, now you've got a different stop here. You've got a stop right under here. So, you took some stock here, maybe some more stock here, but you didn't. But finally, you are definitely buying more stock here because the stock is really within an uptrend. And that's really what we care about. So if we take all of this stuff off, what we really have is we've got this kind of cup here, right here, and then a handle, this little handle below 80 that is actually just slightly higher than this here. This is a really solid cup and handle pattern, and the thing that really tips us off that it's working is when the stock breaks out above the handle, volume picks up. And we like that. That's institutional buying that's pushing this stock up. Now the stock's pulled back, so what do you think happened here? Institutions stopped buying. Do you know what's probably going to happen now? Institutions are going to be buying again. So anyway, that's your trade on Penn. If you're buying it now off of this move, I wouldn't keep a stop below the 50-day moving average. I'd be a little more conservative and keep it just a little bit below 80 bucks. That gives you a pretty good risk reward profile on this stock. So anyway, if you like this analysis, if I'm making sense to you, check out stockmarketmentor.com. First 30 days are on me. I won't send you a bill, but I might help you make some money, and that's a pretty good trade, particularly this early in the year. All right, see you guys next time.